What's up, everybody? Welcome to another edition of Take Five Podcast. Now, we're going to be talking about real estate today. And my special guest is Miss Sandria Taylor Joseph. How are you?
I'm great.
Mrs., I should say. Well, excuse me. How you doing?
I'm doing fine. How are you? How are you
Good.
doing?
I'm good. How's your family?
They're great.
Yeah, the family in Jamaica and stuff is good?
Yeah, some damages to houses and stuff, but they're fine. That's the most important part.
Good to hear because I heard Jamaica is really devastated.
Yes, it's depressing, really.
Yeah,
but we're strong, resilient people, so
absolutely. And I
we'll
think it's going to be build back a lot stronger this time.
Yes,
hopefully.
Definitely.
Hopefully.
That's the goal.
Yep. Well, like I said, we're here to talk about real estate. You're a real estate agent.
Yes, so I'm a realtor, and I'm also a mortgage loan originator.
Okay.
In Georgia. I service mainly, Atlanta metro and surrounding areas. Yeah.
What are some of the common issues you run across before we get into the positive side?
Common issues like in what?
In terms of people trying to get a home.
Oh, wow. Common issue is really credit.
Gotcha.
Yes. So a lot of times someone, reach out and so forth. The credit tend to be the big factor, and then the finance is the other part. Not having enough money to contribute to the deal. Credit can always be fixed, right? Correct. So the main thing you want to do is don't wait until you're ready, like you're looking to get your home next month or two. And you're reaching out this month, because then you're not, in a good position to achieve your goal at that point if there are credit issues. So the main thing you want to do is to reach out like 3 to 6 months before you're ready to see where you're at. We can check to see where you're at, with your credit. We can recommend ways to fix your credit. So that way you're positioning yourself to be ready at the time. To achieve your goal.
Okay. What's an ideal good credit score? So you won't have any issues with a bank or a lender.
I wouldn't say there's an ideal credit score per se. Of course, the higher it is, correct, the better, and you get better rates. Right. But I think there's a misconception that you need like a high 700, 800 credit score.
That's what I always thought.
Wow. That's so far from the truth. In fact, you can get home at a 580 credit score and even lower with, certain conditions. But 580 on an FHA loan, you can get into a home, considering you fulfill the other factors.
Gotcha.
620 is a decent start, especially if you're looking to get down payment assistance. Got so down payment, some starts at 600, but, some lenders, they have like 620, 640 for down payment assistance. So I would say if you're in that range, then you're in a decent position. Of course, the higher, the better.
Gotcha. What if you've had a foreclosure before, bankruptcy before? What does that do for you, or is that a detriment to you?
No. Contrary to what other people think, bankruptcy, you can get a home as early as in 2 years after bankruptcy. Okay. So it depends on the loan type. If it's FHA or conventional and so forth, then the time frame will differ. So these are things, if you're thinking about purchasing a home, you want to reach out to an expert. You want to reach out to a lender, a realtor. We can direct you in the right path as to what to do to get you ready.
Gotcha. Do you just specialize in residential, or do you do commercial as well, or how does that work?
Yeah, so I specialize in residential. I also do some commercial, but I'm really a residential specialist, I would say.
Gotcha. What are some of the red flags that you look for?
Red flags when someone is purchasing?
Correct.
I mean,
or when someone is inquiring, I would say.
Well, yeah. So I wouldn't say there are red flags in particular that I look for. I typically ask certain questions like, okay, have you checked your credit recently? What is the score? Do you have any money saved? If not, do you have money like in your 401k? These are things, are you on a job for at least 2 years? Because these are things that align to
right.
get you pre-approved. So I wouldn't say red flag, but if you are not in the position, like if you haven't had your job for 2 years, then it doesn't mean you can't get a loan, but we have to pivot into other options, like maybe a non-QM loan, non-traditional. So most people don't, right now, especially, we have so much self-employed people,
Right. Right.
influencers and all,
Right.
Uber drivers.
Yeah.
It doesn't mean you can get a home. And most people think you need to have like a W-2 job,
Yeah.
right? And I'm telling you, you can get a home without a W-2. You can use just your tax return. But the thing with the tax return is that most people, self-employed people, will write off just about everything. So you make 6 figures, but your net on
Gotcha.
it may be even negative. So you're not going to get pre-approved because for the difference with the W-2 loan is that they're looking at your gross income, but with the self-employed, they're looking at your net income on your taxes. So if you write up everything, then we have to pivot from the tax returns to like your bank statement. So we can do bank statement loans, can do 1099 loans,
I wasn't aware of that.
profit and loss statement loans.
Are those new or is it
They're
always
not new, but I feel like probably they're not talked about as much.
correct.
And I start to kind of focus a lot on self-employed clients because I feel like there's a gap
Yeah.
with getting those people qualified because really they don't know
Right.
that, there are several options available and you don't have to have the perfect bank's tax returns, but your bank statement may suffice.
Gotcha.
And we could get a CPA letter
Gotcha.
to help with that. And as I said, profit and loss statement,
Right.
all of that. So when you're purchasing a home or you have in mind to purchase a home, the main thing you want to do is to talk to a lender, talk to your realtor, establish, what your goals are so we can pivot. Of course, not every lender is the same. So like the big banks, they don't offer these non-traditional type of loans. You want to go to probably a mortgage broker and ask about these type of loans because the brokers tend to be the ones that offer the non-traditional type of loans.
Are the interest rate higher with those type of entities versus the banks?
Yeah, so that's a good question. Yes, it is because it's more risk, right? They're not, you don't have the traditional W-2, that stability, your income, you may get a big check this month, next month or two, you don't, and so forth. So it's a risk the bank is taking on. So the interest rate is typically like about 1% higher or so. That also depends on your credit. It normally requires a higher credit score for the non-traditional type of loans and higher down payment.
And higher down payment. What is a good interest rate right now as we speak?
Good interest rate.
Yeah.
Well, interest rate being a factor this year for sure.
Yeah.
You can get for an FHA loan, you can get like a 5.6% thereabout right now. And for like a conventional loan, you can get in the low 6, probably 6.12 or so. But there are factors, no situation is identical. So it's individualized based on your specific situation, your credit, your credit, your income, your debt to income ratio, because you can have the income, but you have such high debt. So, stuff like that factors into the whole picture. And if you have assets or reserves in your account, that may help.
Got it. Does foreclosure treat it the same as bankruptcy in terms of buying a home or getting a new home?
No. So foreclosures is different from, bankruptcy. Bankruptcy, of course, it have certain specific timelines that the bank will look at. You have to fulfill, all those requirements before you can look to purchase. While bankruptcy, well, did I just talk about bankruptcy? Yeah, so foreclosure though, it's specific. The banks will look at, okay, how long you were foreclosed on, what your current situation looks like. And as I said, there are always some kind of workaround based on your specific situation. So it really differs from client to client, and you want to speak to the right people to have an understanding of your specific situation and what route to go to make it work.
If you're a couple and you want to purchase a home, is it? I guess my question is it more feasible as a couple or as an individual? How does it work?
In this economy,
Of course, the more income.
yes.
Yeah.
As a couple, of course, typically it makes it, higher income when you combine the two. There is some give and take with that, because if you're looking to navigate, like, let's say you're a couple, but you want to buy and you want to invest, it may make sense for one to buy as a primary home and the other to buy as an investment home.
Gotcha.
So it depends on the income and your goals. But if you have average income, both of you, then it would make sense to combine the income.
Do they check both of your credits?
Yes, so both credits will be checked, the debt to income on both parties, and your income and credit.
So if you own a home as an individual or as a couple, and you want to buy an investment home, what do they check then?
So for investment is treated a little bit differently, because for most investment properties, once you have the down payment and the credit, you can get the investment property really, because for investment, they're looking at, how, depending on the type of investment you're going to do. Because, you have your buy and hold to rent, or your fix and flip and that type of thing. So some investment properties, you just need like a 20% down payment and the credit of...
Gotcha.
Some lenders will do as low as 640. So those are things, because let's say you're buying an investment property to rent, that you can do a DSCR loan where they really factor in how much the property is going to rent for.
Gotcha.
Yeah, so
the renter should be able to pay the loan.
Yeah, basically.
Okay. Right.
So, those are factors that will be considered when you're doing investment loans. Are, I would say, kind of easy to get.
Really? Why is
if
that?
you have the income or the credit, because if it looks right, if the numbers, investment is all about numbers, right? So if the numbers make sense to the financial institution, then it's easier to get the loan. If you have the credit and the down payment, then it's much easier to get an investment as
And
opposed
of course, I guess
to
your payment history has to be in good standings as well.
Well, once you have the credit
Okay.
for the investment, that's the main thing that's looked at for investment property: the credit and the income.
Right.
Yeah, for the primary home, though, your payment history may factor in, because though they're gonna wonder if you're gonna be able to pay your
And
mortgage.
pay on time.
The investment, the intention is that someone else is going to pay. So it's looked at in a different way.
Got it. Is there anything else that you think they should know?
Well, I mean, what I would say right now, the market is, crazy. I would say there are lots that going on at the same time with the economy and uncertainty and all of that. So a lot of people, they are scared to make that move, right? And a lot of people are focusing on the interest rate. But what I would say, instead of focusing on the interest rate, focus on the opportunity, because interest rate is, you can refinance, there are options, right? So if you find yourself in a position where you can buy, then buy. The main thing is if the monthly payment makes sense to you. So don't focus on how much you get pre-approved for, focus on how much you can afford to pay monthly.
Gotcha.
right? Because you can pre-approve for 500,000, but can you afford the mortgage for a $500,000 home?
Yeah.
So focus on your monthly payment. I preach that all the time to my clients. Okay, I know this is your pre-approval, but what is it that you're comfortable paying each month? Because this is a long-term goal, right?
Yeah.
You don't want to get into a home and after a few months you can't pay. So, or you can't buy anything else. You can't afford food.
Or furniture.
So, what you can afford, find a home that can, that fit that budget.
Gotcha.
Don't find the home and then figure out the budget, but figure out the budget first and then a home that fit the budget. That, I would say makes sense because waiting basically is custody. If you look at the trend in the last 5 years, homes have increased nationwide like by 54%. So those people that have been sitting on the sideline like, I'm waiting, I'll see if the market crash, then I'll buy. I've heard that several times. The market is going to crash. I'll buy, and then you can't afford what it is now because you wait. And you kind of wait yourself out of the market. Wow. So if it makes sense to you now, then take that step. You buy real estate and wait. You don't wait to buy real estate.
Gotcha. What do you see folks are gravitating more towards? A home, a townhouse, condos? What are people doing more?
Mainly single-family home. Because, I also work with a lot of clients that relocate to Georgia. And, they just have this idea, especially those from up north, New York. They have this idea, the big land, basement, that type of thing. So a lot of clients really prefer single family. However, what I would say is if your budget doesn't allow for a single family and with all the bells and whistles, get a town home, and then in 2 years or so, you can get the dream home you're looking for. But instead of continuing to pay rent, which is probably the same amount that you would pay for mortgage, get the town home. It's not your dream home. Right. You still have a goal as to what you really want, but you can start here, and then you can rent it out, sell it, whatever. People that bought 2 years ago have helped clients that bought 2 years ago that have over $6,000 in equity selling now. So what other way you're getting that kind of return on investment?
In 2 years,
So that's something to consider. You may not get exactly what you want right now, but take that first step, and eventually you get exactly what you want.
Do you find most people want homes without HRAs nowadays? We had that discussion on the podcast a few weeks ago about HRAs.
Yeah, so I get that all the time, and a lot of times clients come like, I don't want any HOA. I don't want it. But most times they end up in a HOA community because the truth is most of these communities are well kept, well maintained, and it's not that bad, I would say.
Some of them go a little bit too far, though. Just a little bit too far.
Yeah, it depends, though. But the thing is, like, some communities, yes, they're strict with little things and it can be annoying, but it does help to keep the value of the home of course. And, the community. And some of them are, very community based, so they know the neighbors and so forth. And most communities right now, like all the new construction communities, they're HOA, majority of them. So if you want a new build, then it's likely it's going to be in a HOA community because, it also normally comes with amenities.
Gotcha.
So it comes with the HOA. It's really not that bad. You may not be able to paint your home in pink. Or
Who would want to, though? You'd be surprised sometimes.
Yeah, but that's the thing. That's the flexibility that you may not have. Like if you want to change the exterior, you have to get a pre-approval and that kind of stuff. And that's the part that most don't like. But I think it's fine.
How does folks get in contact with you?
Well, my on social media, on Facebook, my name, Sandria Taylor Joseph. I also have a business Facebook page. I use both as business, but I have another one, Homes by Sandria. Instagram is also Homes by Sandria. TikTok, Homes by Sandria. So I'm basically Homes by Sandria.
You're very active on those.
On those. TikTok, because I don't really understand TikTok, to be frank with you. So I just started to kind of like post things over there, but it's just kind of confusing to me. I need a TikTok 101.
I'm just learning it myself. So.
But I'm active on Facebook and Instagram primarily. And or you can call it, text me at 678-887-1313.
All right. I think I've learned a lot today. And if there's anything else that I need to know, let me know. But I think I've learned a lot of. I had a couple of questions in my head that I wanted to, when I told people that I was going to reach out to a real estate person, they sent me some questions to ask. So
Okay.
I kind of remembered them to ask.
Okay. Well, thank you for having me.
Thank you for being here. Appreciate it.
My pleasure.
Right. Once again, my special guest today, Miss Sandria Taylor Joseph. Thank you very much. Make sure to subscribe to the channel. That's youtube.com/Rico Vibes. And we'll catch you next time on another edition of Take 5.
Every day I rise before the sun to make sure our food is perfect. At Golden Crust, we cook everything from scratch because that's what it takes to live up to the name. We bring authentic ingredients from Jamaica to make sure everything tastes just right. And when I say our customers enjoying our food, it makes it all worth it.
Dad, can we get some of this and some of that and this and that?
Golden Crust Caribbean Restaurant. Real Jamaican food cooked from scratch.